3 years, wow. Time flies when you're having fun, doesn't it? So how are you positioning now, or advising investors to position around Brexit as this leadership race continues?
Yeah, I mean, it has been non-stop Brexit fun for 3 years. In the short term, we think that overweight positions in sterling are the way forward.
Really?
So there's a decent risk premium that we think has built up over the course of the last 2 months, exactly in anticipation of this leadership election. Now we're going through that election. We think that the premium is there and that it pays to be taking the other side of that. So I think throughout the last 3 years, sterling's been the asset to trade on Brexit views.
OK, so sterling's been the asset to trade.
Do you think, Christopher, Chris, that now at 127 on cable, where euro sterling is right now, you actually think that as we get closer to that crunch date, that Halloween crunch date, you're not going to see perhaps a lower and more furious volatility period before then, or do you use that to load up?
Well, I'd like to think that we can get to that date without any more volatility, but I think that would be a bit of a futile wish. So before we get there, we need to find out who the new Prime Minister is. I find it very difficult to find anybody in the market who doesn't think that's Boris Johnson and doesn't think that that's therefore negative for the pound, given his commitment to a hard Brexit. We've got to see whether the government survives over the course of the summer under that new leadership. Again, very unclear, with the wafer-thin majority in Parliament. So we just have a number of event risks which we think are kind of reflected in the price today, and that given that balance of risks, taking the long position is likely to be the one that's rewarded.
What about the rest of Europe and how you're positioning there? You've liked BTPs for a little while. That, of course, another area with political risk. So why do you like that? Is it just that you're getting paid to take that risk right now?
Well, so it's not that you can have a sort of warm and fuzzy feeling about Italian fundamentals. We've got debt rising and a deficit that looks excessive. The thing, I guess, that has always spoken in Italy's favour is that it is too big to bail and too big to fail, that it is of a size where, were there to be a systemic event in Italian sovereign risk, it is catastrophic for the rest of Europe. Everybody knows that. So maintaining a lid on Italian yields is clearly in Italians' interests, but it's definitely in Europeans' interests as well. And that's kind of, it may not ever be explicitly stated as part of the policy objectives, but that is one of the policy objectives.